Welcome back to another weekly market and financial update. I hope everyone is doing what they can to stay cool in this intense heat wave we've been experiencing the last few weeks. So, the end of Q2 has already come and passed. And what does that mean for investors, and what should investors be looking for as we approach the end of the second half of this year? So, the market has already priced in a lot of the good news that we've heard. Corporate earnings have been very, very strong, and corporate earnings will continue to have a key role as these numbers get released throughout the end of second quarter. I would expect earnings to start being released over the next few weeks. So depending upon how these corporate earnings look, historically over the last 6 months, they've continued to meet or beat analyst expectations. So as long as that trend continues, that will only help support market valuations where they are today. Additionally, the market has already priced in a Fed rate cut. So what does that mean? That means when the market went up, and had an upsurge when the news came out that the Fed would likely have a rate cut either in Q3 or Q4 later this year, the market has already priced that in. So when the Fed rate cut actually comes to fruition later this year, the market may or may not change. If anything, the market actually may decline if the news behind the rate cut and the Fed comes out and says, hey, we're actually lowering rates because the economy is softening and we're concerned about future economic issues, coming to play in 2025. So that could be a potential issue, and again, could experience some volatility. I personally am on the belief that more volatility is expected. We have the presidential election coming up later this year. Like I said, the market has already priced in a lot of good news. So it is very normal and actually a healthy thing for markets to have market corrections throughout the year. So knowing that we're at an all-time high with markets, a correction is more likely than not, especially with the fact that when the Fed does lower the rates later this year, it really will depend upon the news surrounding that rate cut. So if the Fed says, we're just doing this because we're on track and we promised folks that we would do it, then I think the market will be relatively okay. If the Fed comes out and says, hey, we're lowering this because the economy is softening, then I would expect increased volatility with the markets and even somewhat of a decline. So just things to be wary of as the year progresses. I think corporate earnings, as long as they continue their trend, will help reduce some of that volatility and support valuations for stocks where they are today. So it's important for investors to know that there definitely is some uncertainty coming up over the next 3 to 6 months, and volatility will likely be in a part of our portfolios. So remember to stay patient, understand where your investments are coming from, understand your own personal financial plan, and how those investments are supporting that plan. And as long as you keep those things in mind and stick the course of your plan, not run to any rash or emotional decisions based off of what's going in the economy, then I would anticipate that most folks will get through this pretty smoothly. But if you do have some issues and you are concerned about the markets, we're here as a resource at Vision Retirement. So you're always welcome to reach out to us, give us a call, pop us an email. We're happy to hop on a quick call, quick Zoom, even in person if it makes sense. And we'd love to discuss with you your concerns and help guide you toward a stress-free retirement. That is our slogan after all. So thank you so much for tuning in. As corporate earnings start to get released over the next couple of weeks, we'll talk more and more about that. Again, this is sort of that Q2 recap refresher saying stay the course, understand volatility is a part of normal market conditions, and as long as you can stick through it, everything will be okay. So again, thank you so much for tuning in, and we'll see you next week.